This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management celebrates 5 years of strong returns and SME success. To find out more, please visit www.tradeflow.capital.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC's surprise oil production cuts could lead to higher demand for U.S. oil in Europe and Asia and could encourage some other producers to boost output, industry executives and analysts said on Monday. On Sunday, the OPEC and allies pledged to cut production beginning next month by 1.16 million barrels per day, BPD. Oil prices jumped over 6% on Monday, with U.S. crude futures topping $80 per barrel. Middle East producers' curbs will leave markets short by an average of 2.3 million barrels of oil per day in the second half of 2023, estimated Matt Hagerty, a senior manager for energy consultants BTU Analytics, a FactSet company.
Record volumes of Russian diesel poured into the Middle East in March, ship tracking data showed, as traders cashed in on low prices to stock up the fuel at the Fujairah hub of the United Arab Emirates and in Saudi Arabia, which is boosting exports. The Middle East is quickly becoming a key supplier of the industrial fuel to Europe and Africa, while adding stocks to Asia, as Russian oil adds to rising output from Saudi and Kuwaiti refineries. That effectively elbows Asian diesel exporters out of those markets, further weighing on prices and refiners' margins in the East, which are already hovering at their lowest in more than a year.
Moving on to the top news in the energy sector.
India cut its windfall tax on crude oil to zero from 3,500 rupees, $42.56, a ton, and halved the tax on diesel to 0.5 rupee per litre, a government notification said on Tuesday. India in July imposed a windfall tax on crude oil producers and on exports of gasoline, diesel and aviation fuel, to encourage private refiners to sell fuel products domestically instead of shipping them overseas to take advantage of robust refining margins in global markets. The government adjusts the tax rates twice a month according to global crude oil price movements.
Oil prices rose on Tuesday after OPEC Plus plans to cut more production jolted markets the previous day, with investors' attention shifting to demand trends and the impact of higher prices on the global economy. Brent crude futures were up 43 cents, or 0.5%, to $85.36 a barrel by 0925 GMT. U.S. West Texas Intermediate, WTI, crude futures were trading at $80.89 a barrel, up 47 cents, or 0.6%. Both benchmarks jumped more than 6% on Monday after the OPEC Plus rocked markets with Sunday's announcement of voluntary production cuts of 1.66 million barrels per day, BPD, from May and until the end of 2023. Next, we have the top news in metal markets. Dalian and Singapore iron ore futures fell for a second session on Tuesday, pressured by higher shipments, weak steel demand in the traditionally peak construction season and lingering concerns about government intervention. The current apparent steel demand is weaker than expected, putting downward pressure on the raw materials market, said a Tianjin-based iron ore analyst. Market talks that China's National Development and Reform Commission met with several futures companies in Beijing on Monday to discuss the iron ore market, have raised fears of more government action against hoarding and speculative activities, said analysts.
The Shanghai Futures Exchange, SHFE, will lower margin requirements and trading limits for metals including copper and nickel, it said on Tuesday. Margin requirements for copper and aluminium will be lowered from 12% to 9%. That for zinc and lead will ease from 14% to 9%, according to the exchange. Meanwhile, nickel margin requirement will be lowered from 19% to 12%. SHFE will also move margin requirements for stainless steel from 14% to 10%, and from 12% to 11% for silver.
We will now look at the top news in the agricultural sector.
India has been planning to relax norms to procure wheat from farmers amid untimely rainfall and hail which damaged the crop just before harvesting in key producing central and northern states, government officials and traders told Reuters. The world's second biggest wheat producer plans to buy 34.15 million tons of new season wheat from local farmers to shore up state reserves after purchases dropped 53% last year to 18.8 million tons because of a poor harvest. New season wheat has started arriving on the market, but the harvest has lost luster in some districts because of the recent rainfall, said a senior government official, who declined to be named. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.